very good afternoon and welcome to HYCM's live trading webinar with myself, Giles Coughlin. I am the Chief Currency Analyst here at HYCM, and I'm looking forward to taking us through some key events coming up for this week. Hope everybody is doing well and looking forward to just running through the latest developments in the FX and some of the associated markets. If you could just let me know that you can see my screen and hear my voice okay, that's great. That always gives me reassurance that you can see and hear me. I'm just saying hello to folks as they're coming in. I will. Warren, Salva, good to have you. Fahadin, Amir, Alejandro, good to have you. Some of you guys are new for the first time. Great to have you on board and looking forward to explaining how we can best take advantage of the coming week. Now, before we get going, don't forget that as I go through different trade outlooks, entries, exits, all of this is from an educational perspective. The whole point of this webinar is that you look over my shoulder, someone with a professional trading background, and then you learn how I go about making my decisions in the market to help you inform your decisions. What it isn't a signal trading service. It's an educational service. Now that's important because market conditions change. So many times if I'm taking a trade on one day, then market conditions can change and it becomes irrelevant. So learning for yourself how to recognize those changing market conditions is key to navigating your way through the markets. So that's the reason. Now, as we start the week, we're on a clear risk-on footing. Now, I'll just go through that with the charts, and we'll take a look over on my other screen. So I'm just going to call that up and move us over to the other screen. Yeah, that's great. Now, if you take a look at the Asia Pac, you can see here the Nikkei, the Hang Seng, the Shanghai, they're all higher on the session. Now, the reason for those being higher was some positive news that China has surpassed the US in terms of being the largest recipient of foreign direct investment. So that strong investment into China, given risk sentiment a good boost. Remember, the unwritten rule is that China produces things, manufactures things for the world, and growth in China represents growth for the rest of the world. So that's all been positive in recent trade. Now, we had some recent data come out, the German IFO data, and that just weakened some of the European equity markets. You can see here German equity markets just a little bit lower, and that was because the expectations were worse than expected. Germany, largest participant of the Eurozone. So what happens for Germany is very important for the entire Eurozone. And business climate expected 91.4, came in at 90.1. IFO expectations, current assessment came in 91.1 versus 93.6 expected and 89.2. So pretty poor situation for Germany. None of that was a surprise. Germany have been in a new level of lockdown since December. So this January sentiment being more weak was only to be expected going into the session. Now, it was slightly worse than expected. That's why we saw this Euro-US dollar drop. Normally with a risk on tone, you'd expect Euro-US dollar strength. So just seeing some Euro-US dollar dropping, finding a little bit of support there on the S1 pivot zone, but that's just slightly tempered the risk on tones. However, if you take a look at commodity markets, you can see that the broad complex is higher, crude complex higher, gold, silver higher, copper just coming off a little bit of its recent highs and just a little bit lower now on the session. But the broad strength is still there in the commodity markets and has been there during the session. Now, taking a look at futures markets, you can see that European futures markets have really been, US futures markets have been moving higher. S&P 500, Dow's was pulling off a little bit off its recent levels, and we've got NASDAQ still moving higher on anticipation of higher tech earnings. Apple earnings coming out this Wednesday, and you can see that Apple tends to do very well over this earnings season. This is the last 15 years of Apple during the end of January, beginning of Feb. You can just see there's an outperformance there. And if you bought Apple on the 26th of Jan to the 15th of Feb over the last 15 years, you you would have an annualized return of 78.53%. So a very healthy return for holding Apple in that period of time, and even better, you know, holding Apple from 25th of Jan to 2nd of May has a stronger hit ratio in terms of gains. A slightly less annualized return, but 21 out of those 25 years have been gains between now-ish and the 2nd of May. You know, the old saying, sell in May and go away. You know, buying Apple from January to May would be a solid trade for the last sort of 25 plus years. So that Apple earnings, got Microsoft earnings, all expected to outperform, boosting the Nasdaq higher. So looking at currencies as a whole, we're seeing typical risk-on tones. Aussie, CAD, New Zealand dollar, the so-called commodity currencies. When commodities are higher, these currencies benefit. And the safe haven currencies, this US dollar, Swiss franc, and Japanese yen, all broadly weaker. Yen seeing a little bit of strength, but nothing really to note. Broad safe haven currency weakness. So that means in terms of dominant currency sentiment pairs, we'd expect Aussie US dollar buyers from dips, New Zealand US dollar buyers from dips. My dominant currency sentiment pair today is New Zealand US dollar. Any dips back down to that 0.7170 level considered suitable for buying. Any moves back down to that pivot point could also be considered suitable for buying, but my preferred entry is that 7171 level, with risk tone just changing a little bit, just coming a little bit off the European equity highs on that worse than expected German business climate data. But I would expect dips, buyers to find dips in this for today. So that's where we are today. Now let's just have a little look what we've got coming up in the week. Now we have some central bank speakers, with ECB President Lagarde speaking at the World Economic Forum. That's today. We also have Bank of England's Bailey and ECB's Lane also speaking. So that does have the potential to impact central bank policy. We have had the Bank of England Bailey talking back negative interest rates. We have had President Lagarde saying that she doesn't have to use the full PEP package for the Eurozone. And we have had Bank of Canada also having a more upbeat assessment of their latest central bank meeting. So just to be aware, World Economic Forum, central bankers are there. In terms of Tuesday, a very quiet day. We've got some average earnings out of the UK, but unlikely to be much of a market mover. Nothing really particularly to note on Tuesday. Wednesday has some CPI data. Now that's going to be interesting for Australia. Now Australia employment, their last employment data was pretty good. They did see an increase in full-time employment. That was pretty firm. And inflation data will be important for the RBA. Expectations are for 0.7% for the quarter-to-quarter, trimmed 0.4%. If that's a disappointment, if that disappoints, say you get 0.3%, 0.1%, then you'll be looking at some Australian dollar selling coming into the session. So look out for that. If that outperforms, say we get 1% or up 0.8% for the trim mean, that will be looking at some strong Australian dollar strength. So particularly one to look for there is the Aussie US dollar. That will be the currency pair I'd be looking at, because we've got the FOMC statement coming up later. Now, this is the big event of the week. This week, this is the event that everyone's waiting for. And I'll just explain to you what's going on here. Let me just... Right, okay, let me just show you. So I'm going to go and have a little look at bond yields. Let me just have a look at bonds. Right. A couple of things to draw attention. This chart has been in a lot of focus recently. It's the US 10-year bond chart. And it was the breaking out in January of the US 10-year bonds that resulted in the dollar shooting higher. Okay, now let me just show you. So you can see here that at the moment the dollar's really tracking that 10-year bond yields. US 10-year yields higher, dollar moved higher with it. Hang on, I'm just gonna let my just letting my cat out the door, sorry. You can see here, US 10-year bond yields spiking higher, dollar index following it higher. The dollar is carefully tracking this US 10-year bond yield. Now, on Wednesday, the Federal Reserve is going to meet. Now, if you look at these 10-year bond yields, I'll show you a problem that happened all the way back in 2013. You see here, right? Back in 2013, the bond yield shot from about 1.6 up to about 3.2, when the then chair of the Federal Reserve, Ben Bernanke, he announced Fed tapering of their bond purchases. So the bond purchases are the purchases that are being made to support the US economy. And as the US economy improved, Ben Bernanke said, well, we can start tapering them back. And there was a spike in yields, which really sent, shockwaves through the market. Now, what Fed Powell doesn't want to see a repeat of that. So at the start of the year, part of the reason for this 10-year bond yield strength was on the expectations that the Federal Reserve might start tapering their bond purchases. Now, on Wednesday, lo and behold, Jerome Powell will be speaking, and he will want to reassure markets almost certainly that no, the Federal Reserve is not about to start tapering bond purchases. That's why we're seeing 10-year bond yields moving lower. Okay, that's also why we should be experiencing a little bit of dollar weakness as well, because the market are expecting you can just see here, we're seeing a little bit of strength. That's partly on the risk off sort of vibes that came in from that German IFO data, but we're still below that recent trend line. So the market, it wants the Federal Reserve to really assure them that there won't be a tapering of bond purchases, because that keeps the dollar pressured. That's positive for gold, and that will keep bond yields low. So this is the event to watch, okay? If Jerome Powell comes out on the FOMC meeting coming up this Wednesday, and if he says in the statement or the press conference, if he really assures market that he's not going to be tapering purchases, then you expect dollar weakness, and you expect gold strength and S&P 500 NASDAQ gains. So if Fed Chair Powell comes up and if he says, we won't be tapering at least until, 2 years, don't worry, we're not going to repeat what happened before with Ben Bernanke, tapering is a long way off. If he reassures markets about that, then expect gold strength. Expect S&P 500 strength. So we expect strength in gold here, strength in silver. We'd expect strength in S&P 500 here, and strength in the NASDAQ. And we'd also expect strength in platinum. So that's some of the key events to be looking at going into the rest of the week. Now, if Jerome Powell surprises markets and he says we might start tapering, then expect the exact opposite. We expect dollar strength and gold weakness. And it's a bit more nuanced with the S&P 500 and the NASDAQ. We might expect buyers on dips still, but an initial dip. But certainly the dollar would be a mover. And you'd expect dollar strength. And you can see here that recent trend line broken to the upside. If we saw Fed Powell, if we saw him, starting to really talk about tapering, it's going to happen maybe this year, that the economy is not as bad as feared, then you could expect this 91 level to break out, and that will be a trend change. Okay, that will be a medium-term trend change of the US dollar, and you can expect the retest of that 92.50, 93 region. So it's something to be looking at, very key, very, very keen little potential level to be looking at. It is the biggest event. So what you're looking for, if Jerome Powell's dovish, if he says no tapering, don't even think about tapering. Tapering's the last thing on our mind. Expect gold strength, dollar weakness, S&P 500, NASDAQ strength. If he says no, we are getting ready to taper. Even if he doesn't really mention anything about tapering, then the market will probably read into his silence, and you could anticipate dollar buying, gold, silver weakness, and you'd expect S&P 500, NASDAQ possibly a little dip lower, but then buyers on the dips. So that is the main event of the week. Okay, and at the moment, because the market is expecting a dovish Powell, then we can expect dollar strength to be sold on retracements higher. So that's what I'd expect going into it. As long as the risk tone remains on, expect dollar sellers. So I expect retracements higher to find dollar sellers as long as those risk on tones remain. Then we head in. Oh, don't forget with the FOMC statement, the press conference is just as important as the statement, because often at the press conference, you can have things in the statement clarified, sometimes even contradicted. So whenever you're trading an interest rate decision, remember this: you don't just trade the statement, you also trade the press conference. See the two events essentially as one. Okay, now sometimes you get opportunities, to go one way after the statement, and then you change the other way after the press conference. That's true, but think of it as one big event. You'd be much better off thinking of it like that, rather than thinking the statements happened and then going away, and then you find out that something that was said in the statement was either clarified or contradicted or enhanced during the press conference. Now on Thursday, we have advanced GDP from the US. That will be important for US, starting to see a bit of normalization in the GDP data from that huge gain, which is just after that huge dip. So expect it to be 4.2% out on Thursday. It will be important to get a gauge of US growth and expect that to potentially move risk markets. If risk is on and that's a good data point, expect that to enhance the risk on tone. If risk is off and that's a bad data point, expect that to enhance the risk off tone. So at any rate, it's something to be very aware of going into Thursday. Friday, a slightly quieter end to the week. There's a whole range of different data points, but there's nothing there that's particularly anticipated to move markets. So it's potentially a quieter end in terms of significance of economic data. Far and away, the biggest event for trading this week is that FOMC statement. So that's the one to be really keeping our eyes on. And that's the one that offers the best opportunity. What I'm looking at for this is I'm looking at gold and platinum. If I see a dovish Jerome Powell on Wednesday, then that for me will give good backing for dollar weakness and then some commodity strength. And I would choose platinum and or gold. Now platinum has some strong upside. You can see this is platinum over the last 33 years. Between 27th of January and the sort of middle of Feb, see there's been an annualized return of over 47%. Now platinum, if you just take a look here, right, platinum tends to have strong gains at the start of the year, right? Now the reason for those strong gains are that platinum buyers, it's an industrial metal, tend to step in and make their purchases at the start of the year. This is where platinum has this very upward bias to the year. It goes up at the start of the year, down the second half of the year. So, I was looking at buying platinum in December, did take a nice long on platinum, and I'm looking at potentially getting in again with platinum, but I would use the FOMC, the event on Wednesday, as a catalyst, because if I do get a dovish Jerome Powell, I know, aha, that is a weakness in the US dollar, and that should mean strength in the in platinum. So let me just find the platinum chart. Now it's gone, isn't it? Let me just have a little look. Oh, here it is, yeah. So looking here, you can see those gains that we've had since end of December. See platinum just been rising higher. Start of the year, platinum rising broadly higher. And we're heading into now this key overhead resistance now. See, this is the resistance level here that we're just coming into. Now, you'd expect any moves higher to find profit takers at 1,160 to 1,200. Okay, you expect profit takers into that level. So any weak dollar would be a potential buy. And if I get a bullish close on this bar today, a bullish close, then that will be enough for me to enter long in anticipation of a dovish Fed. So I could enter long at the break of this high and then keep stop running below here and just look for a move back up to 1,160. So that's potentially what I'll be looking for this week. So that's my main event. In terms of Aussie yen, I also like Aussie yen longs as well from market on the global growth narrative, with the vaccine hopes expected to continue to boost the Aussie against the yen in the near term. So folks, that is what I'm looking at. I hope that's helpful. I'm just going to have a look if there's any questions and answers in the question. Yeah, hi Will, that's great, thank you. Fadine, yes, the webinar is being recorded, so you can go to the HYCM website. So if you go here, HYCM website, and this is my blog. So I'll just share with you my blog details here. You can have a look at the blog details there. And you can also register for the online trading workshop here, but you can also see on this page, you can see the previously recorded webinars. Okay, so you can come there. And if the latest one isn't there, please just contact support, Fahadeen, and ask for the latest one to be sent to you, and they will get that sent up over to you. Okay, so yeah, that's great. Okay, folks, as I said, that's the main event. This is the big event of the week. It's the Federal Reserve, and no exchange expected an interest rate, but that's not the issue. It's all about tapering, and will Jerome Powell be looking at tapering in this coming year? And that's going to be the key overriding focus. That's what will give us some dollar movement, and that's what will give us some movement in gold and platinum, and as well as the dollar index. So don't forget, come back on Wednesday. I have a look ahead webinar. I'll just go over to on Wednesday. I have this look ahead webinar at Wednesday at 12:30 GMT, and I go through identifying a key currency pair for trading, and I show you how to develop those skills. And also, we can look at the FOMC statement coming up. We'll look at it again in more detail, how we get ready, and I can help look at some key levels for the day. So do come back and we can check that out. And finally, I will also be back next week looking at key market events, and we can also look back and see how the Federal Reserve statement has moved markets. So if you're developing and looking to grow into fundamental knowledge, come along, do ask questions, and I can take us through step by step. Oh yeah, what is your forecast on Powell? Warren says, will you do tapering or note on the bond purchases? My forecast, for what it's worth, Warren, is that Jerome Powell will do everything to avoid what happened in 2013. This was unpleasant for the markets because the spike high, the move was very fast. So Jerome Powell won't want to see that being repeated. He'll want to slowly introduce the market to bond yield tapering. He won't want to get them to get spooked now. So my anticipation is that Jerome Powell will be very dovish, which is why I'm expecting to see dollar being sold on retracements into Wednesday, and that's why I'm expecting platinum and gold buyers into the FOMC, right? So that's what I'm expecting. I'm expecting to find gold buyers on dips. So any retracement back down to that 1825 level, I'm expecting to find gold buyers from that level there, right? Now, Warren, I could be wrong. I don't have a crystal ball, obviously. I just think that he won't want to repeat what happened in 2013. So I will obviously be reassessing when it comes to the rate statement. Now, if he is more optimistic, Warren, that offers a great opportunity. So if he says, oh, we will be purchasing bonds this year, then expect a sharp spike higher in the dollar and a sharp move lower in gold. So that would be a gold sell and a dollar buy. So that's what I'm expecting, Warren. Yeah, good. That's clear. And for those of you who may be less advanced, just be aware that what you're looking for when you're trading fundamentals is ideally you want something that's very unexpected that offers the best opportunities. So if Jerome Powell is very bullish, you don't think, oh, you know, I got my analysis wrong, you know, well, why did I get that wrong? Instead, you think, well, okay, that's a totally different outlook. It's wrong-footed the market. They're going to see some dollar strength and gold selling. You adapt quickly. You need to be ready to shift on what's happening versus what you expect to happen. Now, okay, you can move into the market as you're expecting certain things, but then when you see the facts, you need to be ready to change with the facts. Yeah, thanks, Will. Will just says, thanks, Giles. Awesome blog, a lot of great articles. There's a wealth of material here in these articles, and I would just say, you know, use them. If there's any article you like, if I could ask you if you could just share them on social media, that helps me with hits and helps me with just spreading the message generally. So do check out, and there's a search function here as well, so you can search, you know, lots of different instruments. You know, if you want to look at Bitcoin, then you can see, you know, the kind of a bit of the movement of Bitcoin from last year. You can see, you know, one of my I think my best trade last year. Yeah, my best trade last year was a Bitcoin long, and you can look at different metals and get a sense of them. And the good news is that it lists them in kind of order of date. So you can go back to December and you can see, you know, that kind of the movement of those different trade ideas, basically. You look at copper and do have, you know, it can really help folks there. Thanks for that, Will. It is good, and it's just helpful to have someone else say that. Yeah, Will says a common mistake of a beginner trader and topics on intermarket analysis and correlations would be something I would recommend. As you mentioned, there's a plethora. Yeah, so intermarket analysis, correlations, that's a very good point. Will, thank you very much. Guys, thank you very much. Really great stuff as per usual. Great questions, great input. and look forward to you guys. Have a good week. Look out for that FOMC event. That's the big daddy of the week, the one to be looking for. That's where the real opportunities are potentially lying. So all eyes focused on that. Take care and have a very good week, and I look forward to being in touch. Thanks now. Goodbye.